in China, there is a central bank digital currency. It's not very popular. WeChat Pay and Alipay are popular. Yeah. And so even in a market where the government has prioritized a central bank digital currency, the private sector innovation, voice-activated payments, whatever they're coming up with next, this is really catalyzing the innovation cycle. That we saw 10 years ago when we founded Circle was this idea that we were going to see a new infrastructure layer on the internet where value itself could be a native part of the internet. Just like we have data and information and communications, we could actually have a native part. And in that world, which today is, I think, best expressed through things like stablecoins, which are a representation of fiat currency as digital currency, we'll move to a world where we don't think about, say, sending a cross-border email. We won't think about sending a cross-border payment. It will be instant, global, frictionless, per the title of the session and the panel, and interoperable in the same way we have that with the web of information and communications. And so I'm really very focused on how do we build these kind of open internet infrastructures that connect the world economically in the same way that we've been connected with information. And so that's what I think of when I think of paying. And there's also been discussion about central bank digital currency in the United States, but it's been rejected. In fact, in the same testimony, Chairman Powell said, we are not moving forward with central bank digital currency. Chairman Powell also said we need to provide clear rules around private sector innovation through digital dollars and stablecoins. Secretary Yellen, who I know will be here in China soon, similarly is advocating, and the U.S. Treasury Department at the FSB at a global level has really said the priority now is regulating this sector. But I think the result, to build on what was shared, the result is actually building a model where the base layer of money is very safe. So you have digital dollars where the assets that back them are held with the central bank or in things like government bonds, short government bonds. And then you have something that everyone on the internet, every user, every business will know this is a cash equivalent instrument. And then you have the traditional central bank oversight, but it's different than commercial bank money. When you give money to a commercial bank, they take the money and then they leverage it and they multiply it by 12 times on average, and they take risk with it. And that introduces systemic risk and financial stability risk. It has other benefits as well, but it introduces this risk. And then from time to time, every 10 years, every 20 years, you have bank failures, you have bank runs, and then you have huge bailouts and so on. And so stablecoins provide a way to have a base layer of money that is very close to the central bank. And so you're not changing monetary policy, but with the benefit of, instead of the government being responsible for developing software, deploying networks, running technology, you allow bank and non-bank companies to actually drive the technological innovation and to be constantly upgrading that technology. Because as we see, whether it's with AI or blockchains or other things, the pace of technological improvement is constant. It's by the week, it's by the month. You can't expect governments to keep that pace. So you have to have this public-private partnership and preserve the role of the central bank, but also unleash the entrepreneurship, the theme of the conference, and innovation in these areas. I think Tencent is actually a tremendous example of doing exactly that. And it's interesting, in China, there is a central bank digital currency. It's not very popular. WeChat Pay and Alipay are popular. Yeah. And so even in a market where the government has prioritized a central bank digital currency, the private sector innovation, voice-activated payments, whatever they're coming up with next, this is really catalyzing the innovation cycle.
Welcome to the Crypto Teacher. And I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And guys, we have the World Economic Forum on digital payment. We know they recently put out a paper on CBDCs, but we have Jeremy from Circle says that the digital yuan is not accepted by the people. And guys, we know China does not care. Whatever China says goes. That's what's going to happen. And Jeremy also stated that Jerome Powell rejected CBDCs. And guys, we know that's not correct. We know the Fed is testing wholesale central bank digital currencies. But we do know how powerful cross-border payments are going to be. We saw Stellar, USDC, team up with the United Nations to send money to the refugees. So guys, that should let you know this system is working perfectly. But remember, this is part of a plan. It moves in phases. And don't forget, guys, the emerging markets did not have the infrastructure that the West has. And that's the reason why it's so easy to implement this fourth industrial revolution in the East. But we're starting to see the QR codes. We see all the things that's going on in the East starting to move over to the West. We have majority of our restaurants are using QR codes. So like I stated, the emerging markets led by China is going to flip that switch on the fourth industrial revolution next year. And of course, we're getting news that the BRICS nations are going to have their own currency backed by gold. But guys, we know it's also going to be digital. But I also think it's just going to be for trade. We know the masses, they want to do this universal basic income. It's impossible to back a currency by gold, but they definitely can back a small percentage. And you know I've done plenty of videos on that. And Mark Yusko broke it down perfectly. But that video I did is probably about 2 years old. But as we see the technology is ready, we know what comes behind that. That's right, the drums are beating. Because we know the NWO wants the robots, algorithms, and drones to take over the economy and use crypto to pay each other. And remember, the crypto teacher told you, because he knows when it comes to the New World Order, it's all planned out. You have a wonderful day.
And in our daily life, even living in the towns and the village, and the mobile payment is supported, and you can pay anything you want in your daily life. So with a mobile phone in China, you can go without a wallet. And all the payment and the QIC or the electronic ID is available in your mobile phone. And we see that in the past 9 years, mobile payment in its social and commerce, in finance, and its application of mobile payment is in fast development. And also, we follow the pace of the Chinese people, and we made this payment network globally, and we support 69 countries in the regions, and we support the Chinese travelers in buying, in making payment, and WeChat really opened up this ecosystem and to be comparable, connected with the global partners, so that cross-border payment is more frictionless and more stable.
When I think about digital payments and digitalization, I think in a revolutionary change in the way payments are done, lowering the per transaction costs. We know in economics, what does per transaction cost mean? When the cost of doing transactions is very high, people do very few and large transactions. That happens in international trade, in domestic trade. When per transaction costs are very low, people do many small transactions. Now, we tend to think that lowering per transaction costs save costs of doing transactions, which is obvious. But the main benefit of that is that lower inventories need to be held by the people doing transactions. Same thing, in my opinion, happened with money. What this lowering of per transaction cost really means is that people will need to hold lower stock of liquid assets. And that is a game changer for the financial industry. So I take this perspective because I think there are three main players, which are the central bankers, commercial banks, and non-bank institutions, call them fintech, big tech, third-party platforms, whatever, okay, that interact with each other. And commercial banks in these new settings do not have necessarily the incentives to innovate too much. But there's a pressure from outside for innovation. And this interoperability and relationship between non-bank platforms and banking, I think is at the center of this change in the way the system is playing. Because For commercial banks, they might not only have the incentives to innovate and lower the amount of liquid assets that people have, but also because from the regulatory point of view, they put security before consumer attractiveness. And on the other hand, other players, which are not as regulated banks, put consumer attractiveness over security. And then I think the great dilemmas, leaving aside the role of central banks and CBDCs that we could talk later on, okay, is how to manage this trade-off between allowing for innovation outside the banking sector, pushing for open banking and the connection between these these non-bank institutions and banks, but making sure that data security is well taken care of, consumer protection is well taken care of, and financial stability is not threatened. On saying that this discussion on central bank digital currencies that not necessarily substitute away the role that the private sector might have on the development of that. Indeed, one of the risks of development of these central bank digital currencies is to take away all the funds from the financial sector and from the commercial banks, and that would be very bad for the country and for the way the central bank would like to work. So it is a design that mixes the role of central banks and the development of private sector, which is probably going to move forward. There is a recent report by the Bank of England a couple of months ago, maybe February 2023, that points in that direction, I think. A different story, though, is the cryptocurrencies, or the original cryptocurrencies, which to some extent do not fit into this model, right? But I tend to agree that it is a mix of private participation and central bank participation that would probably move forward. Otherwise, the risks for the central bank are very high on dealing with thousands of payments, millions of consumers and payments. That is not their business. They don't know how to do it, and would substitute the role of commercial banks. That is neither their intention, I guess.
Yeah.
Today, some of the very fastest growing uses for USDC are in emerging markets, very specifically people who work in one place who want to send funds very, very efficiently to people in other places. The demand is high, not just to get it and receive it and get it in local currency. There's actually demand for dollars. And so digital dollars are a very in-demand thing. If you're in Colombia or you're in Turkey or you're in the Philippines, I think you're interested in receiving funds, but also storing value in a less volatile currency. So that's important economically as well. When you see currencies that are struggling, people's value being destroyed, that's important. But we now have literally through various digital wallets, the ability to deliver funds, very small funds, directly to cash out locations in almost every country in the world, which is very powerful. The other is we're even solving problems when people don't have bank accounts, don't even have access to an e-money system. And so, for example, we've partnered with the United Nations, the High Commission for Refugees, to solve a really hard problem, which is war victims who are refugees, who don't have access to their financial system anymore. And who need to receive aid. Yeah. And so we've worked with the UN to distribute aid in the form of USDC directly to digital wallets that people can just get with their smartphone. And then they can take it to whatever country they're in and conveniently take out cash as well. And so really solving for the most, the people who have the hardest problems is core to what we're working on.
If we talk about cross-border frictionless payment, I think my question is, at the end of the day, we're still all going back to the banking system. Am I right? Like we still need to the SWIFT, the Euroclear, right? When we talk about dollar to dollar, yes, we can go frictionless. But when we go to cross-border, what is the end game? How do you see this to be happening later on?
I'll try and take part of that and yield as well. So what's really interesting is that with USDC, people who receive it around the world, many of the digital wallets actually have partnerships with the card networks. So they actually have partnerships with companies like Visa or MasterCard. So instead of taking the digital currency and moving it out into the banking system, the card networks will let you actually use that stored value, the digital currency, to make a payment to a merchant. And then in turn, Visa and MasterCard, both they have partnerships with Circle. They'll receive the settlement using USDC as well. So someone might have USDC in a wallet in a country, make a payment, and then that issuer basically sends the payment back to a MasterCard or a Visa using USDC as a settlement rail. And so I think the point is that as more and more value is stored and held in these digital currency forms, it will stay in the digital currency forms and does not need to be redeemed into local bank money.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
And also, I do believe the role of crypto is it's digitizing gold. Bitcoin is an international asset.
I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we can have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
Cryptoteacher and the New World Order book, plus the 3 Kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get home stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know, I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York. From COVID Stories 3. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.